Coverage is not the same as solvency. Diato Telecommunity, the Philippines' third mobile operator, has made undeniable progress. The towers stand, SIM cards activate, subscribers join by the millions. Yet beneath this visible achievement lies a financial reality shaped more by funding than by sustainable cash flow. Over the first 9 months of 2025, DITO's revenue grew to nearly 15 billion pesos, a sign of commercial momentum. User numbers increased, usage multiplied, and service revenues surged by over 25%. On the surface, this looks like success. But the bottom line tells a different story. DITO posted a net loss of almost 25 billion pesos in the same period. Costs and expenses, driven by network build-out and operations, outpaced revenue by a wide margin. Add to this the weight of substantial interest and foreign exchange losses, together nearly half of all incoming revenue. Before even considering financing costs, the business still operates at a loss. The challenge, not just gaining users, but surviving a financing structure that relentlessly consumes cash. A closer look at the balance sheet reveals the foundation. Assets total just over 209 billion pesos, while liabilities climb to 305 billion pesos. Current obligations dwarf current assets, creating a funding gap of roughly 90 billion pesos. This gap is bridged not by profits, but by 4 pillars: debt, supplier patience, shareholder support, and investor hope. Debt is the first pillar. DITO runs on large loans, internationally syndicated, to fund the rollout, settle maturing obligations, and pay even the interest itself. Supplier credit is the second. Contractors and technology partners build and wait to be paid. Advances from shareholders form the third, plugging cash flow gaps as they appear. And finally, investor patience. The willingness to believe that losses now will yield profits later, with continued capital infusions and share subscriptions. The end-of-year accounts drive home the point. Net losses deepened, liabilities rose, and equity fell further into deficit. So where does this leave DITO? The business is real. The network exists. Customers are served. Revenue grows. But without fresh capital and continuous support, sustaining operations would be impossible. This is the story of a network in motion, not yet self-sustaining, but propelled by belief. Belief that scale and time will transform a financed endeavor into a true national challenger. For now, DITO is a test of endurance and faith, not just in infrastructure, but in the willingness of lenders, suppliers, shareholders, and investors to keep the signal alive.